Market regulator Sebi has frequently voiced its concerns over the unabated rise in futures and options or F&O market and how it's piling up losses for the small guys, the retail investors. Now, the market watchdog is taking action. In a consultation paper released on July 30th, Sebi proposed sweeping changes that could transform the derivatives market landscape. These bold moves include increasing contract sizes, reducing the number of weekly contracts, and more. Here are Sebi's 7 key proposals for changes in the F&O market. 1. Strike price for options. Right now, Nifty and Bank Nifty options have up to 70 and 90 strike prices covering about 7 to 8% of daily index movement. Sebi wants to cut this down to 50 strikes at launch with intervals of around 4% extending to 8% if needed. 2. Upfront collections of options premium. Currently, you don't have to pay the options premium upfront. Sebi proposes that buyers will need to pay this premium right away moving forward. 3. Calendar spread benefit. Today, you can benefit from lower margin requirements if you have 2 positions with different expiry dates. Sebi wants to remove this benefit for contracts expiring on the same day. 4. Intraday monitoring of position limits. Currently, position limits are checked at the end of the day. Sebi wants these limits monitored throughout the trading day with a phased plan for full implementation. 5. Minimum contract size. The minimum contract size was set at 5 to 10 lakh rupees back in 2015. Sebi's latest proposal raises it to 15 to 20 lakhs initially and then to 20 to 30 lakhs after 6 months. 6. Weekly index products. We have had weekly expiries every day of the week. Sebi suggests limiting this to 1 benchmark index per exchange each week. 7. Margin near expiry. Currently, no extra margin is required in the last 2 trading sessions. Sebi wants to introduce an additional 3% extreme loss margin or ELM on the second last day, increasing to 5% on the final day. The F&O market has seen an exponential rise in retail investor participation since the pandemic. The prospects of quick profit and speculative nature of the instrument has attracted investors to this segment. According to a Sebi study, 89% of individual traders in the equity F&O segment suffered losses with average ticket size of about Rs 1.1 lakh in financial year 2022. Sebi's proposed changes are significant and aimed at protecting retail investors. These moves could lead to increased compliance for market participants but are ultimately intended to create a safer and more transparent trading environment. If implemented, these changes could reshape how investors engage with the futures and options market, potentially reducing the risk associated with high leverage and speculative trading.